Mark Selby, CEO of Canada Nickel, advancing the Crawford nickel sulfide project and unlocking the Timmins nickel district.
Mark, good morning. Thanks for picking up the phone, first of all, and doing this call. Look, we met in Beaver Creek, I think it's a couple of weeks ago now. It feels so long ago. We came away with a few questions and we spoke to a few people, and it was kind of clear to us that obviously whilst things are advancing on the ground, there's still a concern of the funding. Now, you've addressed some of that at Beaver Creek with the announcement of, I guess, near Stalin, sort of 900 million bucks worth of debt, but that kind of full stack financing that we sort of briefly touched upon in Beaver Creek. Can you give us a little bit more insight into what that's going to look like and why Crawford's going to get funded?
Yeah. So when we talked at Beaver Creek, we had just announced the $500 million letter of intent from Export Development Canada. The other key part of that announcement is that they said they would be the mandated lead arranger for a larger debt facility, and then we subsequently announced 500 million Canadian from another financial institution. The key thing there is, we with those two, that's almost 900 million in debt. In terms of the debt package, we're looking at putting a $1.5 billion debt funding package together. And with EDC Canada, who's seen as the leader among export credit agencies and doing mining finance deals, the other global agencies, whether it's US Exim, whether it's KfW or Finvera in Europe, and obviously we'll have the Korean Export Bank with our relationship with Samsung, and if one of the Japanese companies get involved, the Japanese Export Bank. They'll, in general, most of the ECAs just follow EDC's lead. So if we get through the due diligence process with EDC, then this other money shows up. So it's not just 900, with EDC's involvement, that gives us visibility on the full $1.5 billion debt package. So, put a check mark in that box. Then when you get over to the other side of the equation, in terms of the equity package, we're looking at $1 billion. So again, for those people who haven't seen a $2 billion project financing, our project will cost just under $2 billion, but by the time you add in financing costs and so on and so forth, you're looking to put together a $2.5 billion package. In terms of the equity check, we've got over $600 million in refundable tax credits that will come to us from the federal government. Again, there may be other one-off government money comes, but in legislation, there is programs that we qualify for that would provide $600 million in funding. On top of that, we announced in January that we've got $100 million US option with Samsung if they buy 10% of the project for that amount, for 30% of the offtake, and they're keen to get offtake. That gives us a total of $700 million US. So really, at this point, all we're solving for is $300 to $400 million US. And again, we're working closely with Scotia and Deutsche Bank down a path to find someone to buy another 20 to 30% of the project, or structure some offtake deal, again, with some more upfront funding that allows us to solve for that $300 to $400 million US. So, as we've been saying all along, this is a once in a generation opportunity to take advantage of the large flows of government money that are coming into this space that allow you as a retail investor to get a bunch of free leverage from the government, to be able to build a project, that's going to last, in the case of Crawford, at least 40 years.
Okay, so if I can get into it just a little bit, I want to be clear about what the EDC is actually delivering. Because it's government money. Like normally when my banking days, when we're arranging debt, it takes a long time to put together. They're very, very conservative, very, very cautious. And there's a cost to that, right? So in terms of what is the cost of that money to you as far as the EDC is concerned?
Yeah, so the export credit, so the way that the financing package will likely end up getting structured is you'll have, anywhere from 4 to 6 export credit agencies involved. There'll be, a couple of private banks that will get involved. And again, globally today, sadly, there's only about a half a dozen or so that do mining project finance, but they'll come in for a small sliver and they'll effectively help to price the deal in terms of how that deal gets done. Now, again, that would be in a normal non-critical mineral environment. We'll see whether we're able to get additional sweeteners from either the provincial or the federal government in terms of other sort of loan guarantees or other support that would take the cost of that facility down from sort of typical market terms, to an even lower number.
Right, and so that's on the government side. If they're private banks, do they gain comfort from the EDC being involved? I presume they will. What does that do? How does that reflect in terms of the cost of money for you?
Yeah, big time. I mean, again, there's, in terms of what the typical, again, there's typical standard project finance terms. That's what the overall funding package is predicated on, us having to pay. And with the private banks, they're, again, they like to be alongside the ECAs who are writing the big checks. But the opportunity is to go from, again, we're assuming we're just going to pay market terms. If we're able to get some loan guarantees, if we're able to get other kind of financing support from either the provincial or the federal government, that number can be materially lower.
Okay. And just on the kind of the refundable bit, in terms of that $600 million, you kind of got a refundable critical minerals and carbon capture, storage, tax credits. That doesn't necessarily mean the money's up front, but you can borrow against that. I mean, how does that work?
Yeah, you can bridge to it. So in the renewable sector, in solar power, wind, so forth, there's been there's been tax credits available in that space for a while. So, there's a whole industry that provides, upfront financing to bridge to when those credits occur. Again, the nice thing about them as someone who wants to provide that bridge facility is your counterparty is the government of Canada. So, relatively low risk, still AAA rated. And then as well too, those tax credits are earned by spending money, and companies are generally pretty good at spending the money. And so if you've got the full financing package, in place up front, which we'll have to do, as part of any of the funding terms that we have, we've got the government of Canada as the counterparty, and then we just have to spend the money that we've raised. So, we're quite confident that we'll be able to get someone to bridge that facility, and have had been approached by a couple of groups that have said they're interested in doing it.
Right, and then obviously that's during the kind of build out phase, presumably. In which case,
yes.
How regularly do those credits get, I guess, exercised in a if that's the right phrase?
Yeah. So from the initial capital, you're literally the great thing is we qualify for two tax credits, the critical minerals credits, and we expect to qualify for the carbon capture and storage credit, given that will be one of Canada's largest carbon storage facilities. The way the critical minerals credit works is you basically spend the money once it becomes available for use. Then you qualify for the credit. So when you buy a truck and it arrives on site, you still have to assemble it, but it's available for use quite quickly. With the process plant, it's a little more complicated, because until the entire process plant is built, it's not available for use until the whole thing is complete. So we'll be filing those and applying for those tax credits as that happens. So there'll be at least anywhere from a year or 2 year delay to the cash coming back. With the carbon capture and storage tax credit, because there's a application process up front, which we'll be going through in the not too distant future, when you get approved for it, you don't have that available for use restriction. So that's great, because our process plant, which is the biggest chunk of money that won't be available for use immediately, in the case of the carbon capture and storage credit, would be available there. So for us, that's super helpful. So again, most of the tax credits that would qualify for, should be available the next year after we spend the money. So again, from a bridge facility, people aren't going to have to be hanging out there for too long.
Right. Okay. And then, so the other component is, one of the other components, Samsung, $100 million. What do they need to see from you for you to be able to kind of qualify, for them to be able to actually hand over that cash? What's incumbent on you?
Yeah, so we as part of that deal, we basically would say, between now and a construction decision, you form a joint venture, and then they would make the payment on a construction decision. So again, that money would be there day one of the project. And then what we're looking for that remaining, $300 to $400 million that we're looking to solve for, is that, whoever signs up for that, remaining investment, we would look to them to pay some of that money upfront on signing, which would then cover us through the long lead items and some of the detail engineering work that we would need to start next year to be able to be in a position for a construction decision in mid 2025.
Right, and here's and obviously we're talking about, you talk about JV or doing this at project level. This isn't going to hamper Pubco's ability to carry on its other projects as well. So, who? I mean, is Samsung likely to come in from more?
Well, I can't speculate on. Yeah. That I don't know if it'll be Samsung, but no, I mean, Scotia and Deutsche Bank are talking to another set of groups, whether it's trading companies, other people in the battery supply chain. Those are the two main groups that are interested in participating in the project, and those discussions are going well. So again, the goal here is to have one of them over the line by year end, and so again, we want to be in position that when those permits come when we expect them mid next year, that we're ready to go with the full financing package.
I guess what's interesting in me is the kind of transition and thinking. Like, when we were talking over the last 2-3 years, people were going, it'll never happen. $2 billion for a company of that size just isn't doable. It feels very different now. It feels very close now. We're sitting at around sort of 1.6 billion on as we are today, on the table in a meaningful way, and solving for, say, 300 to 400 million on an equity basis is the kind of last step with Scotia. It's been a nice ride. It's been a difficult. Just nice is the wrong word. It's been a difficult ride in terms of the markets, for sure. But you just quietly. I know you've always been quietly confident, but you must feel reassured now that this $2 billion-ish is nearly over the line.
Yeah. No. When you get the visibility now, on that full package, really coming into view. Yeah. No. It feels like you've been you're in the marathon. You've gone up Heartbreak Hill in Boston. And you can see the finish line off in the distance there. So still lots of work to do. But the finish line is in sight in terms of the funding package. And it'll be a good rest of the race.
What does that feel like for you? So what's it feel like for you? Do you think project number 2 can benefit because off the back of what you've done with Crawford? Is it going to be as easy to get the money? Will the money be there? Will the Canadian government want to keep funding projects like this? Are there others like Samsung who'd want to get involved with whichever follows up behind?
The math is very, very simple. There are hundreds of gigawatts of battery plants being built in the United States and Europe, that will require, hundreds of thousands of tons of nickel. The market needs 10 Crawfords to be able to satisfy that demand. On the other side of the fence, again, in the traditional stainless and alloy markets, the big chunk of those are very strategic type industries. They will not want to use Indonesian or Chinese, Indonesian material to supply what they need. Again, they'll be very happy if there's a local, domestic, North American nickel source available. So again, toss in another handful of Crawfords to be able to meet, the demand from those industries. So yes, once Crawford's done, the market is desperate to see another 5 or 6 more projects like that. The market wants an alternative to, Chinese controlled nickel supply that, doesn't damage the environment, doesn't damage a whole set of communities in one part of the world. And so, if for us, that's the reason we put that regional package together, 4 years ago is, given that scale of market opportunity, to be in a position to have the, only large scale source of nickel available that doesn't come from Chinese controlled entities, again, is a tremendous opportunity. And again, not just the finish line for the Crawford financing coming into sight, but, unlocking, what we think is going to be a very, very important nickel district, if not the most important nickel district going forward for Western world consumers is also coming into view.